You're watching Consulting Logistics, presented by FreightPlus. I'm your host, Kyle McNaught. Thanks for checking us out. Well, it's the sort of end of the month. It's kind of we're a week into the new month of September. Summer end. We had a fun long Labor Day, but it only means one thing. The market report's out. So, of course, Chris Peckham, VP of Operations, here to help break down what happened in the month of August for the transportation markets. Chris, how's it going?
Good. How are you?
Good. You and me have a very early day today. It's going to be a long one. So very fun to strap in and start talking. I mean, overall, let's break it down. What happened in August for transportation?
Yeah, August was pretty much a replica of what we've seen in the past across pretty much all modes. We saw capacity continue to tighten, specifically in the truckload market. A run up to Labor Day, that's pretty much the normal. So you run into the typical end of month crunch, and then you've got a holiday coming up. So we saw a huge bull run, across the dry vans, reefers, even flatbed to a lesser degree, run right up to the end of the month. And then now that we're in the beginning of September, we saw the anticipated significant drop with Labor Day volumes. But even in the past couple of days, the volume index has rallied, another 3% back. So it's already starting to claw back at the volume lost over the holiday.
What are we seeing transportation rates wise? I mean, given that we're back in the normal swing of things, but we've been talking about it for the entire year. We needed a break somewhere. We didn't get it. So are rates just so above market, or what are they seeing cost wise?
Well, the market's the market, right? So that is what it is. What we didn't see was any significant break. What we saw was more shippers lock into contracted rates, which drove down a little bit of the rejection rates. But those, the negotiated rates that some shippers are agreeing to are in the mid-teens to 20% year on year. And we're pretty bullish that those rates continue to rise through the balance of this year and also in 2022.
So is it still not really a great time to start kind of trying to negotiate rates or anything?
You can negotiate rates. I mean, to me, the name of the game is capacity. Right? So, I mean, even if you have to pay a super elevated rate, at least your product's going to be moving. I mean, the worst thing you can have as a shipper, if you're in the retail space, is having no product on the shelf, right?
Right. What about service levels? I mean, kind of, especially with the elevator rates, with what you're paying and stuff, how is a logistics program making sure that they're kind of continuing with the normal service levels they want?
Yeah, what we're seeing is obviously service levels continue to suffer across the entire network, but we are having success with our customers who are in managed transportation services programs and being able to secure the right capacity to make sure that the freight's moving. Now, we're able to negotiate rates that are coming in under where the market is today. Now, that's a fairly relative statement given how high the market is. But to me, again, the name of the game is capacity. And if you're in a managed trans program, we just feel you're going to be more successful in securing that capacity.
All right. Let's jump into specific modes and stuff. I know you kind of talked a little bit about it, but what happened in the month of August for truckload?
Yep, truckload in the dry van and reefer space. We saw a big push from about the middle of August to the end of the month. And this is folks just trying to get their volumes out before the end of the month, get them out before the holiday. So we saw the volume index continue to rise, went on a big bull run. And the rejection index did move with it, just not quite at the same level. So the rejection index, sticking around in the low 20s. But all in all, still a very challenging market. And then I know we're going to talk about it in a bit, but then you have Hurricane Ida, which kind of threw everything off kilter as well.
Right. I want to eventually come back to Hurricane Ida, but I think that affected a lot. So it's almost like, let's talk about specific modes and then we'll talk about that natural disaster in general. But yeah, that sounds normal, right? Nothing too crazy with truckload, which is kind of, I guess, nice when nothing like insane happened. But
it's almost an acceptance of this being a quote new normal. And for us, we feel that this is going to last. These conditions are going to last through at least the middle of next year.
Wonderful. All right, let's jump in and do less than truckload. What happened in the month of August for less than truckload?
Yeah, less than truckload, again, pretty much the same as we saw in July. So you see terminals just choking on freight. You see service levels taking a hit. Carriers missing pickups, missing deliveries, freight being trapped. We see that pretty consistently. Again, when you're in that managed trans program, you do get a higher degree of visibility into where that freight is, and you also get a higher degree of service too. So we've seen some wins in that space, but overall, the LTL networks just continue to suffer.
Now, and this is where we will start talking a little bit about stuff, but the hurricane did. I get this feeling, and we had a good quote from Chris Gula, kind of our LTL expert on staff, but he talked about the terminals in the affected states will most likely be backlogged through the month of September.
Yep.
Which seems like that mode gets hit a little bit harder than all other modes because a terminal, kind of how they keep their operation running, can be affected a lot.
Sure. I mean, you close a terminal, and even a national carrier today, first and foremost, national carrier today just said that they are running today at least 10 to 12 days behind. They're embargoing any freight moving into Louisiana. So that freight's not going to move. That doesn't mean that the freight isn't eventually going to need to move. So that freight keeps coming into the terminals. And the terminals, as you know, is you need people, you need equipment, you need buildings.
Power.
Yeah, right. So no power, no terminal operation. So it just throws everything off balance. And I think Chris hit it right on the head in saying that things are going to be backlogged throughout the entire month of September.
Now, something that I find interesting is, you mentioned facility damage, you mentioned equipment damage and like other things, but how does a transportation program, how does a shipper, how do you get insights into what's actually happening on the field? I mean, what's happening on the ground? Because I feel like you don't go online. You can't just search. Like, trust me, I tried to search it yesterday because I was trying to do something. And you can't search LTL terminals closure and like here it all pops up. Like, especially talking like how does a company get information of what's actually happening on the ground of these affected areas?
Yeah, if you're a small to medium-sized shipper, it can be kind of difficult to corral that information because, to your point, it's tough to just go on Google and find it. You can find it, but you have to really know where to look. But more importantly, you have to have a really strong relationship with whoever your national account manager is. If you're a smaller shipper, you may not have a line of sight into any of the networks. That's why being in that managed trans program that helps because it brings you together with all of the other shippers that are in that program. You just get more attention. We get more detail. We know today what terminals are being embargoed. We know what terminals need to be avoided. So if you need to pivot and shift freight away from one carrier to another to avoid those gridlocks, you can do that and benefit from being part of the program.
Yeah, I mean, it's so interesting, especially it's one of those unfair advantages that high volume shippers really get, right? The LTL is going to be talking to them. Your account manager is going to have a direct line, but as a growing company, I mean, this affects you a ton.
Yeah.
And how do you as a mid-size or growing kind of shipper have this kind of communication? It seems unfair because you're already overtaxed. Well, a giant enterprise has a giant corporation, like a good size team that's assisting them with this type of stuff.
Yeah, but it depends what the large organization even does with that information. You'd be surprised at how many large shippers have this information, but they fail to act on it.
Wonderful. All right, let's move on. How did intermodal perform in the month of August?
Intermodal continues to struggle. The intermodal struggles are always going to be heavily tied to import volumes, which we know remain super elevated. Ida impacted some local rail operations. The Norfolk Southern down in Louisiana closed their terminal for a couple days. Not that that's a major intermodal point, but everywhere, Joliet, which is the biggest intermodal interchange location in the States, continues to suffer from severe congestion. And this is also coming off of a week where the Union Pacific decided not to move any freight in there so they could try to clear up the backlog. So it worked to a small degree, but still, in the West Coast ports, you're seeing 10 to 12 day dwell times for intermodal freight moving west to east.
And this led to it like a national average cost per mile high. Was it unheard of, like the high that it hit? Or
well, the national average that we track is based on more contracted rate.
Okay.
So the spot rates are significantly higher than what we're even reporting on. And so it's all about capacity. So the BN, the UP, all the class 1 railroads, they're metering their cargo. So they're not, really, they don't have a huge appetite to bring on new customers. Mm-hmm. And any incremental volume that goes above your forecast could be subject to a surcharge. So it's a very, very challenging environment right now.
Oh God. It just sounds so complex. It sounds so difficult to really navigate, especially as you're probably a growing company because of how much we know stuff like the PMI and all those things. It's nuts. It's one of those, every time we talk, I get a little more insight. It kind of makes me like, oh man, it's just unfair.
Yeah.
It's just unfair. All right. Ocean, our favorite mode of transportation. How did that perform in the month of August?
Pretty horribly from an on-time perspective, from a cost perspective. We saw spot freight costs continue to rise. What we had quoted in the market report was just one of my contacts who is just, telling me where he's got some capacity and what the sell rate is. I've heard plenty of more anecdotal stories about, the buy rates from the shipper side being even higher than that. In fact, we talked to a customer yesterday who's paying $25,000 to $30,000 to get freight to the West Coast and to a moderately inland point there. So it's absolutely insane right now. And there's no idle capacity. The idle capacity globally is below 2%, and all of that capacity is just getting repairs done. So it's not like we've got ships dry docked somewhere just not running.
Jeez. You in the market report, which you can get at freightplus.io/og-market-report, you even put up the table that just shows the different kind of spot rates you heard. It's crazy.
It is.
It's nuts.
It is. And even in the charter business. So, one of the interesting things that we've never really seen before is you see retailers starting to charter their own vessels, right? So Home Depot did it, Walmart did it, Dollar General did it, and now IKEA is doing it. But what was really interesting is there's a 4,200 TEU vessel that just went under agreement for a new charter agreement. It's a 60-day agreement for $200,000 a day. This is a 4,200 TEU vessel. This is not a mega vessel by any stretch. $200,000 a day. And I don't know who is under agreement in this charter agreement, but it's a 60-day minimum. They're going to pay $200,000 a day just to have their own vessel. And that does not include any of the terminal fees or any of that stuff. So you do the math on that. That's an awful lot of money to shell out just to control your own vessel. But again, I don't know who signed that agreement, but that one was a huge bit of news that hit my desk.
Jeez. Wow. That's just trying to even do the math. I'm not a math guy and absolute communications guy. But that's nuts. And we haven't even touched on the COVID outbreak in Vietnam, which was another thing that happened in the August. How much, we know it's a ripple effect every time something happens, but is this just another, God, we can't get a break in ocean?
It is. It definitely is. And we've seen huge slowdowns in Vietnam from all major base ports over there. You've got carriers that are blanking those sailings just because there's no freight to move out. But the freight, the orders are still coming, right? So these orders still need to be produced. It just means they're going to be produced later than what was originally anticipated, which, contributes to this. This isn't going anywhere anytime soon because we still have a huge backlog of orders that need to be produced and shipped and delivered.
All right. Wonderful. I guess let's move over into, holiday season's upon us, as you talked about. One of the major kind of movers during holiday season, I'm guessing small package. Small package, not too much news, but a little bit of kind of a proactive kind of news, or here we go, get ready for this. What happened in the month of August for small package?
Well, the estimates came out on what the capacity shortfall is going to be for both FedEx and UPS, and it's just under 5 million packages per day. Based on the forecast, they're not going to have the capacity to cover that. So typical, they come out during peak season, they announce some new surcharges. The common theme is just, and again, all roads lead back to COVID. The common theme is around the residential deliveries, right? So you and I are buying a lot of packages. Mm-hmm. That's more expensive for FedEx and UPS to deliver. If you think about it, if we ordered a bunch of stuff here today and UPS or FedEx shows up, they're going to be delivering 10, 15 packages at a whack. Now they're delivering 1 or 2 to many different houses. Right, so they're going into neighborhoods it takes more time, costs more in terms of fuel. It's just a higher transaction cost for them. Now, this is, without question, just another revenue stream for them. No doubt about it. It's not just offsetting operational costs. But unfortunately, these are here to stay. They're going to run right through the holiday season. And some are just running until further notice.
Wonderful. And then that you did a really amazing job, especially in the market report, which again on freightplus.io, breaking down sort of what the surcharges are. And I mean, I know we saw every surcharge, year over year increase. Is that, like you're saying, this is just here to stay?
Yeah, I mean, the surcharges typically will increase like for like year on year. They typically go up.
Okay.
But yeah, they are definitely here to stay. They are not going to go anywhere. And again, it's just you have a lack of competition. The only competition right now with FedEx and UPS are going to be your regional parcel carriers, like a Lone Star or a Laser Ship, somebody like that. But from a capacity standpoint, they're maxed out too. Now they're growing, they're reinvesting, more terminals, more trucks, more drivers, all that good stuff, but that just takes time.
Yep. All right. Well, I guess we'll have some fun talking about small packages, kind of the holiday months come upon us. So stay tuned for all that fun conversation. But in the meantime, let's hit a little bit of indicators. Let's talk fuel, especially because I think fuel is one that I have an interesting question for you, but what happened in the month of August for fuel prices?
Yeah, so fuel took a little bit of a dip, but then with Ida, it came rifling back. And week on week, we just saw a 4-cent rise, which doesn't sound like it's all that much, but it is. That's very, very significant. And that's 100% tied to Hurricane Ida. So, we're closer to where we were in 2019 fuel, but we're still running significantly high right now.
Now that's with refineries kind of opening up and like OPEC trying to get stuff moving again, right?
Well, when Hurricane Ida hit, all the offshore drilling rigs were knocked offline, obviously. Now, if you look at when Katrina hit 16 years ago, at the same point in time, post-hurricane, about half of those rigs were back up and running. Right now, only 20% of them are back up and running. Now, it's a bigger market too. So back in Katrina time, we were producing about 1.5 million barrels per day, and now we're producing about 1.8, right? So it's just a bigger market. There's just more of them. And really, the issue is not damage to the rigs, it's the inland damage. So you've got the refineries that are not able to open back up. So the rigs can't flip the switch and get pumping because there's nowhere for the oil to go, right? So they have to wait until it's just a dance, right? So they have to wait till everybody inland comes back online. They come back online. There's a little bit, oil, as we've said before, is a bit of an emotional market. So people now, there's a perception that there's going to be this huge shortage. So we saw the price go up week on week, and it's gone up 2 weeks in a row. I fully expect it to go up another 3-4 cents next week because not everybody's going to be back online. Now, there has been a little bit of a reforecasting down due to the Delta variant on what consumption is going to look like. So we may start to see a break in fuel prices as the year goes on.
I was going to say, so time to start grabbing your plastic bags and filling up the fuel, or no?
Not yet.
Okay,
I mean,
cool.
we could very well see a break, but I expect another 1 or 2 weeks of increased fuel prices.
It's interesting. Like I assume when you say like, oh, the drills are offline, you're like, well, it's just power it up. Like it's not that hard to turn it back on, but like you're saying, it's more the downstream effect. It's kind of like everything that Hurricane Ida kind of did was it's downstream. It's not really about like the specific drill out in the ocean that doesn't really sustain so much damage. It's more where it's going. It just can't do that. Let's talk a little bit about PMI. I think the Purchasing Managers Index, really nothing's changing with it. It's kind of, we're seeing what we're seeing, right?
Yeah, it's been 14 months of positive growth. So anything above that 50 line indicates an expansionary economy. We're still there, and there's still some restrictions, just all related to COVID. Again, not being able to get the workers back in, not being able to get the inputs in to produce the final product. So it's one of those things, like if there were no restrictions, would be even more positive, which again contributes to that. This problem isn't going away anytime soon. Right. We even see in the auto sector, all the major auto manufacturers are shutting down plants because they can't get their inputs. So when auto rebounds, that's going to contribute to the transportation markets as well.
Yeah, I mean, it's, like you said, there's just, I guess, some optimism if you're a transportation manager is that like, oh, it could be worse. I mean, I'm sure the company-wise, like, man, we need our stuff. We have a demand. Why can't we fill this? But yeah, it's all, you kind of see it. It is a puzzle piece that kind of does come together. And you can kind of realize too that like, listen, you got to buckle up, tighten your belt. This is happening for a while. All right. Great breakdown per usual. I know we're kind of tight on time, so let's quickly kind of wrap it up. Talk to me a little bit about Hurricane Ida. Just overall impact. How long do we expect this? And then I have some questions too, because most of the time we talked a little bit before, like natural disasters are pretty easy to plan for, but given the current environment we are in, how much does a natural disaster truly impact the entire market compared to kind of what it like the old normal, I guess?
Yeah, well, anytime that there's a natural disaster, and let's use Ida as the example. Now what ends up happening is all these relief efforts start up, right? And we'll talk about FEMA. FEMA is going to end up supporting and needing to get materials and supplies into Louisiana, into the Gulf area. So now what you're going to end up seeing, because FEMA is a non-asset-based organization, they don't own trucks. They have to go out and contract trucks. So what you could see here is FEMA offering a significantly attractive rate to lure truckers in and say, hey, move this freight into the Louisiana area. All right. So you'll see like inbound to Texas you'll definitely see some hits there, because that would be a good staging area to deliver supplies into Louisiana. Now, eventually the outbound Louisiana freight is going to start to build up again, right? And that's going to need to move as well. So what it does, it just throws off the entire balance across the U.S.
But how I guess in today's rates, like what does a lucrative like offer look like, given how elevated everything is? How does FEMA? Is that something that, hey, like FEMA might be like, oh damn, I'm really competing all of a sudden with like rates?
Well, I mean, all a competitive offer means is that if there's a carrier who's under contract with a shipper, and say they're moving stuff from Columbus to New Jersey, right? But that carrier is also a FEMA approved carrier. FEMA's going to go out to all their approved carriers. They're going to say, hey, we have this much freight that we need to move from some point in the U.S. down to the Louisiana area. Now, this carrier may look at it and say, wow, well, I'm making X on doing my, Columbus to Jersey run, but now I can make Y doing a run from, say, the Columbus area down in Louisiana. And if the math adds up, then they're going to drop the loads with their customer. They're going to they could take the higher paying ones. And again, now you've got equipment that's kind of out of position, because that trucker probably had a backhaul moving back west coming out of Jersey. And now that truck's out of position. Now the shipper's got to recover that, right? They have to go and find a different carrier to move that. And it's probably not going to be at the contracted rate that they negotiated. So they're going to have to offer a carrier an even higher rate. So you can see the whole residual impact of rates continuing to increase.
Yeah, it's fascinating. I mean, there's probably a ton of time we could take and talk about this. Maybe that's another podcast.
Yeah.
Just how, because I've got like 20 more questions, but I know our time's short. We always want to make these quick and easy so you can just kind of listen to it and go. So Chris, thanks so much. How can people contact you? What's the best way?
Yep. You can reach out to me at cpeckham@freightplus.io. You can hit me up on LinkedIn, send me your questions, give us some thoughts and feedback on these podcasts. We're always willing to pivot and adjust and make it a little bit more tailored. So
yeah, we'll put more Chris on. Less Kyle, more Chris. And then that market, 100%, that much better than me, especially with my dumb questions. The August market report's out now, freightplus.io/market-report. Link in the show notes. Otherwise, thanks for watching Consulting Logistics. I'm Kyle McNaught. Rock and roll. And that's our show. The August market report is out now. Link in the description below, or visit freightplus.io. In the meantime, subscribe to our channel. And thanks for watching Consulting Logistics. I'm Kyle McNaught. Rock and roll.